There are times when, if you tune into the show, it's all about the Federal Reserve and trade policy all the time. I prefer to focus on the fundamentals of individual companies. You know that, trying to help you identify winning stocks. But there are moments when these big picture macro forces trump what's going on at the companies themselves. No pun intended. We just went over the Federal Reserve, what they really do, why they feel compelled to raise interest rates in a strong economy, why those higher rates are bad for business for the vast majority of the companies we follow, and why the Fed eases up when the economy gets too weak to try to get it back going again. But there's another mechanism that makes rate hikes devastating to Wall Street, long before the damage spreads to Main Street. It's the same reason that stocks soar when we get a signal that the rate hikes will stop. I'm talking about the very nature of the stock market itself. I like to say that the market's a forecasting machine. The business is all about anticipation. Millions of traders and investors make bets on stocks. Each one of them is trying to predict the future, not looking at their screen and saying, oh, that's the price. Taken individually, tons of these wagers will turn out to be wrong. Taken together, the market's surprisingly good at making predictions. The end result is that the stock market tends to reflect not the present, but Wall Street's collective views about the future. Say 6 to 9 months out, that's the worldview. So when we get a new piece of data that changes our impression of the future, it could have a dramatic impact on stock prices immediately. If money managers suddenly get the sense that the economy is going to gradually slow down over the next 6 months, what happens? Stocks don't go down gradually along with the economy over the next half year. No, stocks go down immediately, violently, because so many investors are suddenly anticipating a slowdown, and they take action. That's how you end up with a horrific decline like we had in 2022. I say decline, but really, you know what? It was a sudden onset of a bear market.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.